Google parent Alphabet reportedly nearing a deal to acquire cybersecurity startup Wiz. That's according to the Wall Street Journal. The groundbreaking $23 billion deal would be the largest acquisition for the company. For more on what Alphabet's move in the cloud cybersecurity space could mean for big tech, let's get to Jefferies senior analyst Brent Thill, who's joining us now to discuss. Brent, it's good to see you. So obviously this would be a big deal. A big deal at a time when big deals are scrutinized by Washington. So why is it so appealing that Alphabet might be considering this even in the face of that perhaps scrutiny?
Yes, security is number one, and Google right now effectively is trying to get bigger trust with larger enterprises and small and mid-sized enterprises. So Wiz would effectively help build their credibility in ensuring your data is secure in the cloud. And that, again, remains the top CIO priority. If you recall, they were effectively in the hunt for HubSpot, which we never thought made a lot of sense, given it's an application company. They're not really in the app space. They were on Amazon, AWS. There were a bunch of other considerations. In this situation, I think that they can make the case that there's precedent. If you look at Palo Alto Networks, $100 billion plus market cap, Cloudflare. There are a lot of cyber names that have inherently higher market caps. If Wiz continued on its trajectory, certainly you could start to look out 4 or 5 years. Could the company independently have this type of multiple? So I think, relatively speaking, other cyber names were at that valuation, and they could, from a perspective on the financials, could make that actually work pretty well. So I was not a fan of the HubSpot transaction potential. I think this makes a lot more sense, given that they can address both small, mid, and large enterprises with this technology. The government, there's zero chance, in my opinion, they could push back on this because it's enabling the security and safety of data, and no one has dominant market share. So it would make a lot of sense for us. So again, we've heard a lot of chatter and M&A by Google. None of it's happened. Clearly, the HubSpot deal, at least in the interim, fell apart. But this deal, in my opinion, makes a lot more sense. I'd be a lot more excited as a shareholder if this was happening.
Brent, I also want to get your take kind of broadly on the software sector and what you see ahead in the back half. How optimistic are you, Brent? I asked, we had another financial analyst on the show earlier, sounded relatively more cautious on software. Where are you at?
I'm more excited because everyone hates software right now. I've said this. I feel like I'm changing oil underneath with no daylight, and it's been a tough front half of the year. So I think the sentiment is awful. Most of our big institutional investors are underweight software. Everyone is in hardware, semis, AI infrastructure. So I'm actually going to take the other side of this, which is I think that right now everyone is so negative, and I haven't seen this in my career for as long as I've done this, and how negative it is. So when you think about the sentiment and the setup, it feels really bad. And as they say, invest in with fear and sell with greed. And right now we got a lot of fear. So I think it's go time. The IGV has been slowly making its way back up against the semi names. Again, I'm not expecting a breakout. But if companies actually maintain or even cut guide a little bit, de-risk the guide, everyone starts to look at 25, multiples come in, you start to see more M&A, Trump gets in office and M&A comes back. I mean, my view is like it's more constructive for software, just given how negative everyone is. I can't imagine it getting more negative. Unless companies have to cut numbers by like 20%. I don't see that, but we just had Workday, Salesforce, a number of companies cut numbers. So I'm actually moderately more constructive because I think a lot of the bad news is already in these stocks.
Brent, I got to pick up on one particular thing you said, which is that if Trump wins election here, that the M&A landscape gets a lot more constructive. Is that how you think that would play out?
I think most are believing that it would be more business friendly with Republicans in office. Ultimately, I think that it could potentially help, and we'll see. We don't know, but perhaps that could help. And again, it's been too restrictive. If you look at past deals that have been shut down, Amazon trying to buy a vacuum cleaner company, iRobot, Adobe getting blocked on Figma when there was no overhang. And again, I know these were EU decisions, not US decisions, but I do think that ultimately the consolidation of our segment needs to happen. There needs to be more of it, and it actually is healthy for the overall landscape in tech. And so I think that the perceived him going to office could actually be a good positive for small and mid cap software names as we go into the back half of the year.
Brent, as we head into earnings here, you look at those big tech names. I know you favor many of them, but in your coverage universe, Amazon, Meta, Alphabet, Microsoft, is there one name, Brent, you'd be more bullish than the others heading into the print?
The biggest theme right now is AI, and so for us in the enterprise, that's Microsoft and Amazon for the enterprise. For consumer AI, it's Meta and Google. And I still am holding to this, and I know it's super boring, but the companies with AI that are going to win are the companies that have capital, that have users, and have the data. And those companies have those ingredients. So while everyone wants me to say some small cap or some other name, I just keep looking back. And again, I'm glad we've had this pick for the front half of the year. I mean, these stocks are up between 20 and 30+% year to date. They've been steady. They haven't had NVIDIA-like returns, but remember, AI is not out of infrastructure. It will come to software. And I think it comes to Microsoft, Amazon, and the others I spoke about first, and they're in unbelievable positions. And so we continue to have that framework for the back half of the year.
Brent, something you told us earlier this year has just really stuck with me, which you said 2024 is going to be the start of the implementation of AI, and then 2025 is really going to be the revenue year when we start to see that more. As you're aware, there's been a little more skepticism even around, not just in software, but even more broadly, that AI is going to bring all these changes that have been talked about. As we've gotten further along, I mean, that was a few months ago that you talked about that. Like, what is going to be the killer use case, or how is this all going to play out as we head into the rest of this year and into next year?
Today, it's all in infrastructure. If you look at energy, data centers, NVIDIA's outperformance. So we've talked about AI being in infrastructure. It's not in applications. It will spread, and it will come to our lives. And I think you're already seeing it in some of the products that Google has. You're seeing it in my daily use of Perplexity. You're seeing it now. Companies, many in the financial services organizations are starting to roll out Microsoft Copilot. And we're just getting initial access. So we're all going through the training. We're learning. We're not AI ninjas. I'm an AI dummy right now. I'm still learning how to use these products. And again, we're effectively, as kids either cannonball or put their baby toe in the water. We're putting our baby toe in the water right now on AI. And so we've said this, that in software, it's going to be really slow. It's going to be slower than we all think. And then it will accelerate super quick. So we're going to overestimate the near term, underestimate the long term, as they say. And the use cases are so wide ranging. Healthcare, radiology, finding, issues with patients that doctors can't pick up. So you see it in healthcare, you see it in financial services, making better decisions. You see it in everyday emails, like how do you write a better composed email or ensure that you're not forgetting something? How do you do sales targeting? There's so many use cases. We could talk for hours. And I think every industry is going to be impacted, and it's going to be slow. It's not going to happen overnight. And I've said this, I don't believe, again, software this year, companies like Salesforce.com have said zero revenue from AI. So it's coming to a theater near you. It's not out yet, but it's going to take a long time. It's all in enabling infrastructure. So 24 is the year of infrastructure, highway, procure the land, build the infrastructure, the pipes, all that, and then put up these applications on top of that infrastructure. That is more of a late 24 into 25. And look, there are going to be some wild AI disasters. It's going to happen, right? And right now in my opinion, it's easier to pick the winners than the losers because we can see who's winning. Microsoft's winning. Amazon's going to win. They're sitting on 50% of the cloud computing market share. they are getting looks from many of the top companies we interact with to help their customers with AI. So we are really, really early. It's going to be a fun journey. It's going to be a wild journey. But again, I think we're like the beginning of this trail, and other companies like, Salesforce, who's coming from behind, will catch up. And so there's ways to play this too in laggards. Like, that's probably more of a 25 way to play AI, not a 24.
Well, we'll keep having that discussion as we go from dipping in the baby toe to wading in to diving in maybe at some point. Brent, it's great to catch up with you as always. Thanks.
Thank you.